Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the AI and Technology Conference. The first presentation of the day is from Datatec. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Jens Montanana. He's the Chief Executive Officer of Datatec, which trades on the OTCQX Best Market under the symbol DTTLF and on the JSE under the symbol DTC. Welcome, Jens.
Good morning. I'll kick off. I've got Shanae, who's our Group Financial Director, on the line as well to help with any questions later on if needed, but I'll be covering the bulk of the presentation. And if we could kick off to the first or to the second slide, Shanae, which is just to make sure I'm in sync with you. That's the one. What do we do? So essentially, we are a 40-year-old company. I'll get to our history in a second. We are basically, we're not a manufacturer. We don't develop software. We're an intermediary services company in everything we do. We have two main divisions. One of them is a supplier of technology, a global distribution business called Westcon. And the other business we run is a services company, managed services and a system integration business called Logicalis. So everything we do is in these three main domains: cybersecurity, networking, which is our heritage, networking and data communications, and originally telecommunications infrastructure was our history. And nowadays, increasingly, of course, hybrid cloud infrastructure, which is the fusion of these other main areas that we operate in. If you could quickly go to the next slide, Shanae, which is Datatec today. Datatec today, just draw your attention to FY25. We have a February year end. So the numbers that we show at the back of this pack are actually about a year old, because in 2 weeks' time, we will have finished our FY26 year. We don't report quarterly. We report semi-annually, like European companies do. So our half year is our August, and our full year is in February. We report under IFRS. So we're just pulling up some of the headline numbers here, because obviously our IFRS revenues are considerably lower than our gross revenues, or gross invoice income, we call it. But in the old measurement of total sales, we would be a $7.7 billion business last year. More importantly, gross profit, which is where we focus investors' minds, headed towards $1 billion. And last year we did almost 250 million EBITDA. And I must stress that all these numbers are, pretty much 1 year out of date. We've been going for 40 years this year. This is our 40th anniversary. So we're not a new story. We're not a remake. We've been essentially in this industry doing similar things for a long time. We are in over 50 countries around the world. We've got a presence in every South America, North America, Europe, Middle East and Africa, Asia Pacific, and Australia, New Zealand. So we've got a very good global footprint. We have over 11,000 people. And as I mentioned at the beginning, we operate through two main brands: Westcon Comstore, which is our technology supply business, and Logicalis, which is our services business. We have a very small management consulting business, but that's just operates in the UK. The next slide, if you're onto that, Shanae, shows our shareholder return fact sheet, amongst other things. We show here the top 10 shareholders, of which I am the largest, followed by the PIC, which is the Public Investment Corporation in South Africa. It's basically the state pension fund. And you'll also see, though, that obviously we have our roots in South Africa, but only about 2% of our business is actually in South Africa. That's the legacy of the company. And nowadays, most of our business is in Europe, North America, and Asia Pacific. Europe is our single biggest area of business. And you'll see that our shareholder base is quite international as well. 60% of the shareholders are South African, and just over 40% are in the rest of the world. And we also point out here our TSR, total shareholder return, which has been very robust over many, many years. And you can't just look at our share price, because we've been a company a business where we've had different series of special dividends over the last 10, 15 years. So when you look at our total capitalized valuation of the business, which includes the current share price plus everything we've given back, it's quite considerable. In fact, we've given back most probably close to our market cap, just over $1 billion to shareholders in the last 20 years. Next slide just shows some of the trends influencing the industry today. Of course, there's an awful lot of AI chatter at the moment. I think it's just worth positioning ourselves here. We are an entirely B2B business. On one side of our business, we represent the technologies of companies like Cisco and Palo Alto and CrowdStrike and Cloudflare and F5 and many cybersecurity companies with obviously with a bias towards networking, because that was our history or origins. We don't have any B2C exposure in our business, and of course, if you were following our story 20 years ago, we would have been mentioning names like Nokia and Motorola and the like. And of course, that's all because of the internet, and internet technology has morphed into a completely new generation of players. And of course, with the cloud, there's been yet another generation of tech providers, like some of those names I mentioned. And you're going to see that all over again now with the advent of AI. But I think it's worth I want to spend just a minute here in terms of our positioning. We are basically a industrial technology supply business, right? I mentioned companies like Cisco and Palo Alto. So networking infrastructure, cybersecurity infrastructure, and then professional services on the other side of our business. Everything we do is B2B. And we're in that channel, I guess, of IT infrastructure. We don't have exposure to PCs, mobile devices, laptops, smartphones. We don't touch that, let's call it the endpoint. We are only focused on the network and data center. These are basically all data centers. Data centers used to be on customers' premises, and increasingly companies don't run their own data centers. They either use third parties, or they use the cloud, or they use a hybrid of hyperscalers and other providers. But at the end of the day, the data has to be somewhere. So we operate at that end in terms of our professional services and the products we supply. And then we also, obviously, the majority of our business is supplying directly and indirectly enterprises, mid-size SMBs, mid-size organizations, all the way up to very large organizations. But as I say, no B2C exposure. We on this, I just want to focus on the AI elevated investment. I mean, it's clear in the channels that we operate that there is very robust demand for AI infrastructure. Most companies are well behind the curve in terms of where they need to be with their internal investments. And I guess we think we must be going to enter a period now where you're going to see a little bit of a pivot. It's been the last 10 or 20 years has all been about software and services. And the irony is, and of course we think we're reasonably well placed given the balance of our business, there's a bit of a return to hardware now, obviously, as companies have to play catch up in terms of their infrastructure upgrades. So I think if you look at where the IT GDP breakdown will look like in the next few years, you're mostly going to see a resurgence in CapEx and products and so on, not to the extent of services, but in addition to services, if that makes sense. It's a little bit like holding on to your car. The longer you hold on to your car, the higher your service and maintenance costs. Whereas, and of course, the longer you hold on to your car, the more expensive it is to replace it when you need to replace it. And I think that's the analogy that's supposed to be going on in the IT world at the moment, that especially at the enterprise and business end, companies now realizing that they're going to need a significant step forward in terms of newness and modernization of their IT infrastructure to be able to, address the application needs going forward. I see Ivan, our CFO, has managed to join. Hello, Ivan.
Hi, Jens.
I'm going to move on to the next slide, which is basically where the Datatec group operates. This is a pictorial view of basically everything in our, I guess, kind of ecosystem is mostly the right way to put it. And we've put our logo in the areas that we operate. We are not an agency. We are not a hyperscaler. We're not a telco or a service provider. And we're not a developer of software. I mentioned at the beginning, we don't have any secret sauce in our business. But we are a distribution business. We do provide professional services and consulting. We do provide managed services. And of course, in different forms, we're a reseller because we're an intermediary. And then, of course, we do the aggregation and system integration that goes with it. It's just sort of, it's just, I guess this is just the touch points of where we are in the IT ecosystem. The next slide is, I guess, it's a bit busy. This is a slide, I'm assuming you're on it, Shanae. It's called AI is Driving the Evolution of IT Services Ecosystem. This is a very busy slide, but it basically shows you where you can see our logo with Logicalis and Westcon, where we sit in that kind of total ecosystem of IT intermediaries, which is very, very broad. I mean, Accenture's in there, Kyndryl's in there, which is the old IBM Global Services. The Indian outsourcers are in there. Then we've got more direct plays for US audience. The most directly listed comparables we've got are companies like CDW, E+, Insight, and of course these sort of companies exist in other parts of the world as well as listed comparables, and we have some of them there. That's on the services world. And then of course in the distribution world, most people know of Tech Data Cynics and Ingram Micro, which has been public, then private, then public, and Arrow Electronics and the like. But it's a pretty busy slide, but it just gives you some idea of how we fit into this IT services scape, as I say, ecosystem. Next slide is a snapshot of the last 3 years. And Ivan, I did stress right at the beginning that we're about these statistics are about it, not statistics. This reporting history is a year out of date, but we don't report quarterly. We report twice a year, and this is for the first time followers to this presentation or our business. They'll have to wait a few weeks or a month or so, and they'll see our full year results. But this basically shows you how the evolution of our gross profit, which is the most important thing to look at because the revenue recognition keeps changing. So the dollars we bring in the door are really what you need to track. And then you subtract from our gross profit our operating expenses, and then of course you get our EBITDA. You might want to jump in here, Ivan, and explain that just that one little down and back up again in our underlying earnings per share and what happened in that year.
Sorry, Jens, can you hear me? Am I?
Yes, I said you might want to segue in and explain what happened to our underlying earnings per share they were up and then down and back up again in that year.
Yeah, so let me just see, in 24, I think that was sort of what we've done here is we've recently changed the underlying earnings per share definition to exclude unrealized, to basically, previously we excluded unrealized FX movements from underlying earnings per share, which we currently don't exclude. And if you were to sort of to rebase on a like-for-like basis, there was a slight sort of decrease in earnings per share in the FY24 year. So that all had to do with sort of foreign exchange movements in that year.
Okay, good. Right, perfect. All right. So then that's our 3-year track record of P&L. Then we basically have, then there's a concluding slide here, which I won't bother to read, in terms of our differentiation. We've been listed for 30 years, just worth pointing that out. And then there's an appendix after this where we show half year and full year divisional results of both the main businesses and then the consolidated picture of Datatec. But I think that would be a good time to hand over with 10 minutes to go if we've got any Q&A, and I can of course backtrack to any of these slides if appropriate. I see Ivan has frozen.
I'm still on audio. I don't know, my screen seems to have frozen, sorry.
Yeah.
Jens, we do have some questions. I will proceed with the first one for you. What are Datatec's durable competitive edge versus other value-added distributors and integrators?
Yeah, very good question. We operate the whole IT services world. Basically, this is a very good question that applies to our whole industry. What's your differential? And the differential, I guess, at the end of the day, is the sustainability of the business, the length we've been around, the people we employ, the methodologies we have, our international or global coverage. As I said, like our peers and competitors, we don't have any secret sauce in our business. There's no silver bullet that separates us from the others. It's basically where we sit in the industry, our reputation, our brand, and I think obviously, given our history and legacy, we are and it can also depend on the bets you make as a business in terms of focus areas and skills, and remaining current and addressing the right technologies and so on. We don't focus on ERP software. We've never been a database company. I mean, there are many areas of things that we don't do. So I think at the end of the day, our differentiation is our focus. It's our domain. It's basically our domain knowledge, right? We're very focused in network. It was data communications, then networking, now it's cybersecurity. And it's basically been our professionals, our domain knowledge, the niche that we're in, which is a large niche now, our global footprint, or international footprint. And I guess it's where we sit in the hierarchy. We're not up there competing with IBM Global Services, Kyndryl and Accenture. We're a notch below that. Our typical customer is not a Fortune 500 or Fortune 1000 customer. It's mid-market to large businesses. And of course, the further down the pyramid you go, it becomes obviously much broader, right? So our customers are large customers, but they're not mega global. So for example, our largest customer in Germany is Commerzbank, right? Large domestic play, but it's not a global company. Unilever is a big customer of ours. Farmers in the US is a big customer of ours. Santander and Telmex in South America is a big customer of ours. Singtel and Westpac in Australia is a big customer of ours. So that kind of helps you in terms of where our positioning is. But going back to your core question, which is what's our differentiation? Our differentiation is knowledge base, domain experience. We are fairly narrow, I would say, set of. We operate in quite a narrow skill set area because it's an area where you need to have deep skills. So we're largely a techie and engineering organisation. If you look at the bulk of those 11,000 people, they are mainly professional services, technical engineering staff. Right, another question, please.
Thank you, Jens. We've got a question for Ivan. Are you providing guidance for FY26 and FY27?
So the only guidance that we've provided was for FY26, and we basically, when we issued our results for the first 6 months of FY26, we made forward-looking commentary, and we basically guided the market that we expect all of our divisions to have a better financial performance in FY26 compared to FY27. So that's the only guidance that FY26 compared to FY25, and we haven't given any guidance for FY27 at this stage.
And we typically don't. I know in the US it's more typical with quarterly reporting to provide, you provide continual guidance, but we don't. And that's by the way, that's not typical in Europe or South Africa either. What we do is quite normal.
Jens, another question. How are you impacted by navigating tariffs and trade restrictions?
Another good question. So essentially, you've got to look at Datatec as an exporter of US technology. That's pretty much what we do. That's on the supply side, on the technology distribution side. Obviously, on the services side, it's a local story. So you've got to look at Datatec in two halves. On the product side, say on the technology side, 95% plus of tech manufacturers are in the US. So we're an exporter of US technology, which is all priced in dollars. That's kind of like the first big item or big point. Then you've got to ask yourself, okay, what's tariffs doing to US tech exports? Well, not an awful lot, because then obviously they're the consequences of semiconductor shortages and the consequences of when hardware is brought into the US and then re-exported. But nowadays, a lot of IT tech hardware is not made in the US, it's made outside. So it's not really subject to that, let's call it tariff uplift and then re-exporting. And there is no tariff consequences for intellectual property and software and the like. So we haven't really seen, but I mean, we're, in the grand scheme of things, we're relatively small. The read across is Cisco or Microsoft or Palo Alto or Fortinet or, all these companies that we represent. But we don't really see that as we don't anticipate that being an issue, right? Because of the US dominance in tech. If you then look at the other, in terms of our other sources, and let's call it other sources of revenue and profit. So you have this half that our business is a tech supplier around the world. Obviously, we have a US presence, so that's dollar. But everything else is dollar to local currency. So generally in this environment, not overnight, but generally a weaker dollar is our friend because US exports cost less, right? But the dollar's been strong for 20 years, right? Okay, maybe it will weaken a little bit now, but that's another kind of thing to put in the back of investors' minds, is we're a dollar exporter. So what does that mean? If other markets, if EMs do well, if other currencies get stronger, then of course the cost of US technology in those countries becomes cheaper, right? So that's a tailwind. Then you've got to look at our services. The services that we do are the opposite. Our services are all in local currency. So our services in Spain and Germany and France and Holland are in euros. Our services in the UK are in pounds. Our services in South Africa are in rands. Our services are in Australia, blah, blah, blah. So they're all in Brazil. They're all in local currency. So it's almost like a kind of natural, there are various sort of pistons at play here, that if the dollar is strong, the value of the absolute product is higher. If the dollar's weak, the value of our local services are higher, because when you translate those pounds and euros and Brazilian reals into dollars, they're worth more. That gives you a feel for, but that's the same with any global or multinational business. Another question, please, or any other questions?
Yes. Are there any persistent misconceptions potential shareholders have about Datatec?
I think sometimes we're not a difficult business, but because we have more than one business stream, we're sometimes difficult to unwrap or understand from that perspective. Because we're basically a holding company on top of three main assets. So we've always structurally suffered typical holding company discount at the top, investors' perceptions. Okay, if you're in South Africa, we're well known, but if you're outside of South Africa, we're not so well known. So there's that. So you could say there's a sovereign discount, there's a holding company discount, and there's, we need to explain ourselves. But I think we've worked awfully hard in the last few years, and and we've basically worn this on our sleeve for the last 3 or 4 years, that ultimately the business, we think, is most probably a breakup story into the different main buckets, and investors are starting to realise that that's an opportunity. Our senior management in both the main divisions are shareholders in their own divisions, so pretty much like private equity would structure. So that tells you that at some point for our senior management to monetize or make out, there needs to be realization of the or some kind of breakup of the current structure. Now that could be a sale of the units, it could be a merger of the units, it could be some of the businesses get paired with other assets and we become a shareholder in a bigger business. But I mean, obviously we've been focusing in the last few years on maximizing our profits and growth opportunity, which has been pretty robust actually ever since the COVID years and the move online and hybrid working and the like. It's been very favorable to networking and cybersecurity. So we're in a situation now that yes, all of these things are going to happen at some point, but our main focus right now is on delivering maximum results. I'm just conscious of the time. Maybe one more question.
Yeah. What are your milestones and growth catalysts for 2026?
Oh, well, there's actually 26, 27. I think our milestones are, our milestones are financial. We have a little bit of M&A. We're not an M&A junkie business by any stretch. Many years ago, of course, we were built entirely on M&A, but we've done hardly any M&A in the last 10 years. And we see opportunity now for M&A, but that's really around skills acquisition and time to market. And as most people are aware, AI is driving a need for business automation and optimization, and we're well on top of that inside of our own business. And that's starting to come through in terms of our own operating leverage and operating ratios. So one of the milestones we've set out numerically is improving our operating margins in both of the businesses. I mean, our EBITDA margins in our services business have gone from 5 to 8%. In our technology supply business, they've gone from 2% to 4%. So, and we have reasonably aggressive objectives to keep increasing efficiency in our business. We're a tech company after all, so we need to turn the mirror on ourselves in terms of our own efficiency. So that is really it's a bit of a long-winded answer, but our objectives are around that. It's basically around growth and margins and better working capital utilization. Right. Is that okay, Shane?
Yes, Jens. We have one more question, but I think you have answered it indirectly, and it was just around new markets. So,
yeah. If any of the attendees would like further information or more direct interaction with the company, it's not a problem if they could feedback through Jonathan Patterson, our representative there in the US.